Hi there, everybody. Welcome. My name is Nick Giretto. I head up the Future Policy team at the ABA, and delighted to welcome you to this webinar series or this webinar today. This is actually the last for the year of a series of webinars that the ABA runs on two different themes or two different tracks. Actually, there's a technology track which my team is involved in, and a economic policy track which my colleague Emma Penzo, who heads up that stream of work at the ABA, runs. Um, we're able to use these to bring perspectives from our ABA associate members to our member banks. Today's session, we're going to explore cloud computing, but specifically the risk, the use of cloud in terms of risk reduction and business enablement, but even beyond that, thinking about it from a APRA CPS 230 perspective and how that can assist with APRA compliance and managing APRA expectations. I'm not going to say much more other than to acknowledge AWS for contributing their time and, more importantly, their talent to today's session. I'm delighted that they're actually bringing four of their key players with expertise in this area. Jamie Simon is the director for the ANZ Financial Services business for AWS. Krish Day is the principal solution architect in the governance, risk and compliance area for AWS. Tatiana Pandarevich is AI and ML specialist. And finally, Julian Busick, solutions architect. Between the four of them, they'll bring you the different perspectives on cloud computing, robust engagement, and that vital APRA perspective. Probably enough from me. I'm going to hand over right now to Jamie to begin the presentation.
Right. Thank you very much, Nick, and good afternoon, everybody. Welcome. Thank you very much for having us. We're delighted to be here to share an AWS point of view on this topic. And I'll just kick the session off with two disclaimers. And the first is this is an AWS point of view. It's built on a deep understanding and deep engagement with the regulator, as well as many customers with whom we support as they look to achieve their compliance and manage the risk and manage the resilience of their environments in the cloud. But it is just that, it's a point of view, and it shouldn't be considered as formal advice. We certainly recommend that you do seek formal advice that comes to how you set up and manage for your own environments, particularly in preparation for its CPS 230. The other is that this is an AWS point of view. So we aimed to make this an informational session where a lot of the principles that we're going to share will apply to any cloud service provider, any hyperscaler cloud service provider. But having said that, not all cloud services are the same. And so this is an AWS lens or an AWS point of view in it. And there's going to be some nuances in that based on the way that AWS architects its cloud, the way that we design for resilience, the way that we approach a shared responsibility model around things like security, et cetera. It's certainly not intended to be a sales pitch or anything like that. It's very much for informational purposes, but it does require us to be a little bit more AWS specific in how we're sharing what we're sharing today. But it is intended to kind of provide principles that apply across any of the cloud providers. When Nick was referring to talent, he was referring to the other three colleagues of mine on the screen and not to me, so I won't take too long up front, but I will frame things up a little bit with regard to what we're seeing and some of the trends that are going on and some of the basic principles of sort of operating in the cloud as it relates to managing obligations of the regulator, but also the internal obligations, internal governance controls that financial services organisations and banks in particular look to put in place, because the environment is changing and it's changing quite rapidly. There's a lot of risks, some unique, some broader to all industries that most, if not all, financial services are grappling with. Some of those are regulatory. There's evolving principles-based regulatory requirements, and CPS 230 is a big focus at the moment and certainly a focus for this conversation. But those shifting expectations of regulators are creating some uncertainty for some entities, and understanding and managing those and applying those within individual organisations' risk appetite and their own governance controls is an ongoing and a constant challenge. Another is that many of the Australian organisations are not just regulated by Australian regulators like APRA, but also operate offshore and have to manage the expectations of regulators across all markets in which they operate, which introduces ongoing complexity. There is a heavy focus around the technical controls that are used to manage the environment, as well as the documentation, the reporting, which is constantly evolving. The threat landscape, particularly around cybersecurity, is constantly dynamic, and the perpetrators of these threats are they're only getting smarter, and the techniques and the tools that they use are constantly evolving, and managing that is an ongoing challenge. And the talent that exists to manage all these complexities is a real issue that we see coming out quite a bit. These are very specialist skills required to support an organisation to manage all of these risks, and they can be challenging and difficult to find. So cloud represents an opportunity to address a number of these issues, or to put some to apply technologies and policies and procedures that help to manage many of those. But it's important to note that operating in the cloud, you don't resolve obligation. It is very much a shared responsibility model. And what you see in this slide is the way that we think about shared responsibility in the cloud. So we talk about AWS assuming responsibility of the cloud. So when it comes to the physical infrastructure, the data center under which the infrastructure is housed, the operating systems and software that manage that infrastructure, all of the elements that go around managing the cloud as an entity itself, AWS takes responsibility off our customers in managing those obligations. But responsibility for security and resilience in the cloud is retained by the organisation themselves. What we mean by that is the elements you see here in the slide that have to do with really customer data primarily. So access to data, the encryption of data, the transfer of data, and the elements of software that sit above that operating system stack remain in the hands of the organisations that we support and work with. We do provide a lot of controls, we provide a lot of tooling, we provide a lot of advice to support that, but we do need to look at it from a shared responsibility perspective. Just move to the next slide. One thing that we do invest very heavily, however, is in making sure that all of the right certifications are in place. And so one thing that customers rely very heavily on when they move to the cloud is a cloud service provider meeting global standards around certifications, attestations, laws, regulations, privacy legislation, and aligning to some of the common frameworks that are critical to manage obligations and manage risk in the cloud. And feedback I often get from customers is this is one of the unanticipated benefits they get from moving to the cloud. So whilst they move to address cost benefits, to get agility in an organization, to be able to do more experimentation and drive more product outcomes for customers, one of the unintended consequences of this, having a lot of this managed on their behalf by the cloud service provider, is a significant benefit that they see. Just move on, Julian. However, it is an entire model. So it's not just about the infrastructure, and even the shared security model that I mentioned before. Whilst that is important, for regulated entities, we see the regulators being very focused not just on the controls being put in place for in and off the cloud, but even more so on the how of cloud. So how cloud is implemented, and the controls, the operations, the governance, and even the strategy that organizations deploy that wraps around the cloud services that they're accessing in order to drive that business value is incredibly important. So understanding that, having a clear strategy around that, having experts that can design those business processes and drive that change to the organization. So it's not just the technology advantage, but the organizational advantage that then can be truly realized by this new way of operating, this new way of accessing technology services. Just jump to the next slide. And as I mentioned before, there are a lot of there's a lot of resources that that we build and all other cloud services providers build to support that. So again, it's not just about the technology, it's not just about accessing compute, network, database, AI/ML services in the cloud. It's about how that's architected and how they're deployed in order to be able to get value out of them whilst managing risk, whilst building the right kind of governance controls, building the right level of automation into the reporting that manages risks in a better, more efficient way and drives through that business value. So that frames things up a little bit. As I mentioned, I'm not going to speak for too long. I'm going to pause there and I'm going to pass to Krish now, who's going to go a little deeper, specifically into CPS 230 and how we interpret and understand the guidance and the considerations that our customers, all of you, need to think about or consider over the next few months as you prepare, and some of the benefits that cloud can drive. Over to you, Krish.
Thank you, Jamie, and thanks again for having us. I'll be quite brief. I'd like to provide a quick overview of CPS 230, some of the key expectations and recommendations that we have against them, and leave you with some takeaways. So Julian, if you'd like to go ahead, please. Next one, please. The context to 230 is that it is part of APRA's Prudential Standard modernization, which is a complicated way of saying that they were trying to reduce the number of standards that our regulated entities have to comply with. But as you know, new regulations are quite noisy. There's quite a lot of discourse all the way down from the board to the executive to the management layer, practitioners, consultants, and also service providers or material service providers in the mix. What we hope to do today is provide you some valuable signal intel amongst the noise that you may have heard of. Next slide, please. When I mentioned CPS 230, the Operational Risk Management Standard, was part of APRA's Prudential Standard modernization, specifically, it is designed to reduce the CPS 231 outsourcing standard and the CPS 232 business continuity management standard into one holistic operational risk standard. Now, APRA standards are designed to be durable. As you know, they have the backing of Australian law through the APRA Act 1998. So the challenge that APRA has is to provide a set of expectations to industry from the largest, most complex, multi-state, multi-line financial services providers, all the way down to regional and local credit unions, which are multitudes, dimensions smaller in complexity and product set. So they do this by providing standards that outline principles and expectations. Next slide, please, Julian. For CPS 230, there are three key expectations. The first around having a process to identify, assess, and manage operational risks, with the key emphasis on having effective internal controls to mitigate these risks. Another important part of this pillar is having monitoring and remediation in place. So the feedback loop of operational risk management through to your corporate governance framework and up through to the board ultimately, who are accountable for these operational risk and risk management, is quite important. The second key pillar of CPS 230 is to be able to continue providing financial obligations to the customers, which is Joe Public, yourself, myself, and others, and the banking community as a whole. But more specifically, to be able to continue to deliver critical operations in the face of severe disruptions with a credible business continuity plan and specified tolerance levels. The third aspect of CPS 230 is to effectively manage the risk associated with service providers, such as AWS and other cloud providers you may have in use within your organization. The key aspects here are to have a comprehensive service management policy, a compliant formal agreement, and most importantly, robust monitoring against this agreement that is tied to your corporate governance, operations, and framework. In terms of key recommendations against these expectations, for the management of operational risk, it really ties back to understanding your responsibilities and the responsibilities of any service provider that is supporting your critical operations. So going back to the shared responsibility model that Jamie outlined, having a clear understanding of the responsibilities and controls that you manage as an entity and that you rely on your providers to manage on your behalf is key. It doesn't neglect the accountability for the effective operation of these controls, but seeking assurance over the combined control environment is really important. So to do this within AWS, we do have a service, AWS Artifact, that contains all the assurance reports that you have seen in the previous presentation. For our financial services and banking community in Australia, the SOC 2 report is often the most relied upon source of control assurance over the AWS environment. What is key is to also overlay this with the control testing that you perform within your 3 lines of defense within your organizations. Together, you have a full view of assurance of the complete control environment. With the second expectation around the ability to continue to deliver critical operations, the key facet to this is to ensure that whatever workloads and applications you're migrating to the cloud are designed and operating to tolerate disruptions. So to follow best practice architecture guidance from your provider that you're working with is key. In the AWS context, this means the AWS well-architected framework, which has 6 pillars designed around security, operational excellence, performance, and so on. Now, the critical part of being able to continue to deliver services in the face of disruptions is to validate this through a credible business continuity plan and disaster recovery plan. This means to identify the severe disruptions within a cloud delivery context and to go about proving these on an ongoing basis. Thirdly, the management of risks around service providers. The number one priority here is to ensure that you have an agreement that is compliant with the expectations that is outlined in CPS 230. In the AWS context, this means having an enterprise agreement, which has been in place for our financial services customers for a number of years now and has been updated both for CPS 230 and for CPS 234, the information security standard that was released a few years ago. The other important recommendation is to understand what provider governance mechanisms you have available from your providers in order to continually have oversight of how your environment is operating in the cloud and how it's being managed. Next slide, please. So a lot of you who have gone through the CPS 230 standard may notice there's actually not a lot of new content in there. By my estimation, about 80% of the content in 230 and the expectations are reiterations of what's in the existing 231 and 232 standards, which have been around since 2001, 2002 in particular. So what is new? One particular really clear scoping function that APRA has provided in response to the previous discussion around what is a material service provider is they've quite helpfully specified critical operations. So in the banking context, payments, deposit taking, management, custody, settlements and clearing, and interestingly, customer inquiries are specified critical operations. And our key advice here is to work backwards from these in terms of trying to manage the scope and the workload and prioritization of effort as it relates to your CPS 230 implementation program. Next slide, please, Julian. There are 3 other key things that I believe that should be called out in terms of new expectations. The first one is around having appropriate and sound IT capability, not just for current, but project business needs, which is a really interesting call out from APRA. It means, in my estimation, that training and enablement is in place within your organization and is reflective of not just your current needs, but your future needs. So in terms of adoption of cloud, in terms of adoption of services such as generative AI and other emerging technologies, APRA is now seeking and expecting that organizations have a robust training and enablement plan to support this, which makes sense, right? You don't want to be operating new machinery without being thoroughly trained and certified to operate that machinery. I think that's a useful analogy to keep in mind. The second key difference that I've observed is that previously customer inquiry systems were usually lower on the risk priority lens. So contact center or mobile app technology that provides an interface for the customer to contact the financial institution is now considered critical operations. So make sure that your use cases of customer-facing web apps, mobile applications, and contact center technology are appropriately rated and assessed in the higher category of extreme inherent risk workloads. Lastly, APRA's called out that they would like entities to be aware of the risks associated with a specific geographic location or any concentration within service providers and the fourth party providers that service providers may rely on in providing services related to your critical operations. My advice is to engage with this service provider's specialist to understand what mitigations they have in place for these sorts of concentration risks. From an AWS perspective, we see it under three key mitigations around geography, operating model, and technology, which my colleague Julian will go into further during his presentation. Okay, wanting to wrap up real quick, key takeaways for yourselves. In order to manage the stress and volume of activity, I suggest having a real razor-sharp focus on your critical operations, i.e. those people, processes, and workloads that are required to fulfill your financial obligation to your customer. APRA has quite helpfully pointed out the 4 areas of critical operations for banking, and being ruthless around scoping will really help manage your effort and prioritization. Second key takeaway, well-architected workloads can sustain disruptions and are able to give you prescriptive advice as to how to be designing and operating workloads that can continue to operate in the range of disruption scenarios. Lastly, AWS Enterprise Support are here to help you with provider governance and helping you close that loop between cloud adoption, operation, and oversight. And as always, we're always here to help. So please do reach out if you have any other further questions. Otherwise, I'll pass to my colleague, Tatiana.
Thanks, Krish. So my name is Tatiana Pandurovic. I am a senior AI ML specialist at Amazon Web Services, and my role is to work with organisations all across Australia and New Zealand to help them innovate with generative AI. Next slide, please. I'll be sharing with you today how financial institutions can navigate the evolving regulatory landscape around cloud and generative AI adoption while effectively managing the associated risks. The global regulatory environment is changing rapidly, with the UK, EU, Singapore, and US all issuing new guidelines in this space. The Australian government has released the voluntary AI safety standards in August this year, and these reflect a range of the international standards I've just mentioned, including ISO 42001 and the US standard on AI risk management, NIST AI risk management framework. APRA has made it clear that their existing framework remains fit for purpose for increased uptake of AI, machine learning, and generative AI. APRA's messaging to the industry is one of cautious optimism. They see the significant benefits that these transformative technologies can deliver, from improved productivity and cost efficiencies to more personalised customer experiences. At the AFIA Risk Summit earlier in May this year, Therese McCarthy-Hockey mentioned that entities with robust technology platforms and a strong track record of risk management are good candidates to experiment with AI and should feel confident proceeding. At the same time, APRA is emphasising the need for appropriate guardrails to ensure the responsible use of AI and generative AI. If we look at APRA's current standards and guidelines, the key areas of focus are cybersecurity, data risk management, and third-party risk. These standards are high-level, principles-based, and technology-neutral, while also providing a solid foundation for AI and GenAI adoption. APRA has also been vocal about the need for voluntary AI safety standards and potential mandatory requirements, particularly in high-risk use cases. For example, in the financial services industry, high-risk use cases include using AI as part of processes for credit assessment, insurance, or risk management. The key is having the right guardrails, risk, and governance frameworks in place to ensure the responsible use of AI in banking. Next slide, please. As we begin talking about how you can mitigate risks, I think it's interesting to share with you an observation we've noticed, which is that customers in traditionally highly regulated industries like banking have been innovating with generative AI at a faster rate than average compared to other organisations in the market. And the reason for this is that customers in these industries have had to meet the strict compliance of these regulations for the last couple of decades, which has led them to invest in building robust data foundations as well as risk and governance frameworks. This has meant that the uplift to extract meaningful value from generative AI has been smaller for these organisations, leading to innovations at a faster rate. At AWS, we define responsible AI as being made up of 6 key dimensions, and these are bias and fairness, explainability, robustness, privacy and security, governance, and transparency. While this is our definition today, we will continue to iterate these principles as AI technologies continue to mature. You're likely to see variations of these principles within other acts and from other vendors as well. The important thing to note here is that there are capabilities within cloud-based platforms that allow you to mitigate risks and ensure the adoption of responsible AI practices. And I'll take you through some of these features now. If we start with content filtering, these are guardrails that allow organizations to block harmful or inappropriate content for AI model inputs and outputs. This helps ensure AI applications remain compliant with APRA's expectations for responsible AI use. If we move on to topic restrictions, these allow organizations to define specific topics to be avoided in AI interactions. So for example, a banking chatbot could be configured to avoid providing investment advice, aligning with regulatory restrictions. Sensitive information protection. These are guardrails that can detect and redact personally identifiable information in AI inputs and outputs. And this helps protect customer privacy and compliance with data protection requirements. Custom word filters. These allow companies to set up a list of words or phrases to block, helping maintain appropriate communication. Contextual grounding checks is a feature that helps detect and filter AI hallucinations in model responses. So this feature compares the AI model's response to reference sources like a bank's policy documents or regulatory guidelines. It can detect and filter out hallucinated responses that are not grounded in authoritative sources, thus improving the accuracy and reliability of AI-generated responses. This aligns with APRA's focus on ensuring AI systems provide accurate and trustworthy information. Customizable policies. These are guardrails that allow organizations to tailor AI safeguards to their specific needs and regulatory requirements, helping them align with APRA's principles-based approach. Consistent safeguards are guardrails that can be applied across multiple AI models and applications, ensuring a standardized approach to responsible AI use across the organization. And transparency and testing. This provides the ability to test guardrails and iterate on configurations. And this supports APRA's expectations for due diligence and appropriate monitoring of AI systems. Next slide, please, Julian. Now, we'll take a look at some real-world examples of how financial services institutions have harnessed the power of AI and generative AI while adhering to regulatory expectations. Here are some customer examples based on adoption of AWS technology, but these are applicable to adoption of cloud in general. NASDAQ used Amazon Bedrock to improve their anti-money laundering and fraud prevention processes. By leveraging GenAI, they were able to enhance the effectiveness of their financial crime management program. And surveillance analysts estimated a 33% reduction in investigation time with improved overall outcomes for their customers. This represents a substantial gain in investigation efficiency. MasterCard is another great example. They employ AWS's AI and machine learning services to detect and prevent fraudulent transactions. This enables them to provide a seamless customer experience while robustly safeguarding against fraudulent activities. This solution has enabled MasterCard to detect 3 times the amount of fraudulent transactions and reduce false positives tenfold, leading to billions of dollars in merchant savings and a better experience for customers. And we're also seeing GenAI play a crucial role in modernising legacy systems, especially among Australian financial services customers undertaking major transformations. Banks like NAB are using generative AI to improve the speed and quality of building and modifying applications, reducing their technical debt and enhancing their process resilience. A recent survey carried out among NAB developers found that half of the code suggestions by Amazon Q Developer were being accepted by engineers, and 45% of engineers found improvement in the quality of the final code from using the tool. So to wrap up, APRA has made it clear that their existing framework remains fit for purpose for financial institutions to increase their uptake and adoption of AI, machine learning, and generative AI, as long as they have the right guardrails, risk, and governance frameworks in place. In addition to this, it's really important to establish processes that enable you to regularly evaluate these frameworks as AI continues to evolve, to ensure you're deploying AI systems safely, securely, and responsibly, whilst allowing for innovation to realise the benefits of these transformative technologies. I'll now pass on to Julian, who will take us through Cloud for CPS 230, Resilience and Recovery.
Thanks, Tatiana. Hello, everybody. My name is Julian Busick. I'm a security solutions architect focused on risk and regulatory matters at AWS. I'm going to wrap up today by using an infrastructure lens to discuss how cloud can be used to better meet and indeed exceed CPS's 230's resilience and recovery requirements. How cloud can essentially outstrip what you can achieve with on-prem models. So I'll start by examining key resilience principles from CPS 230, and then I'll move to some actual worked examples to give some practical demonstrations. So in terms of CPS 230's resilience and recovery expectations, which Krish touched on in his presentation, in essence, APRA wants you as regulated entities to take reasonable steps to minimise the likelihood and impact of disruptions on your critical operations. They want you to be able to maintain your critical operations within tolerance throughout severe disruptions, and they also want you to systematically validate your resilience and recovery posture. APRA is not prescriptive in how you do this and is open to the use of cloud for any system which supports critical business processes. So hyperscale cloud provides a much more resilient infrastructure platform than the old sort of traditional on-prem 2DC model. I've got a generic construct for cloud on the left, although that's very typical of AWS, and your old 2DC primary and secondary model on the right. A common model for cloud deployment is one which uses regions and availability zones. A region is the largest unit of infrastructure deployment, and each region typically consists of one or more availability zones. Each availability zone in turn consists of one or more data centers. Cloud regions are independent and isolated from each other, and availability zones within a region are also independent of each other. All of the DCs that make up availability zones have separate power, water, connectivity, etc. They are placed far enough apart so that they are not subject to the same natural hazards or risks, but they are close enough to allow for real-time data replication, which is a really important consideration for banking customers. You can deploy your applications and your backups of systems and data across multiple availability zones and even across multiple regions in cloud, depending on the type of CPS 230 resilience scenario that you're modeling for. This is perhaps an oversimplified example, but ask yourself, how much more resilient is the cloud model on the left compared to on-prem on the right if the resilience scenario you're modeling for is the loss of a single data center? However, as Jamie said at the start, not all clouds are created equal. The construct I've shown on the left is typical of AWS, but region and availability zone are not copyrighted or specific technical terms. A region or availability zone with another provider may just mean a single data center. A really key part of the due diligence that APRA wants you to do under CPS 30 is understand the underlying infrastructure and capabilities of your provider, because this has huge implications for the resilience of the workloads that you build in the cloud. Now, you've got two key considerations when you are building resilient systems in the cloud. The first is architecting for high availability. This means building systems which are resistant to single or multiple component failures and use cloud native capabilities like automated fault detection, failover, and self-healing. This helps address the CPS 230 requirement around reducing likelihood and impact of disruptions. The second key consideration is for disaster recovery. This is developing, rehearsing, and validating your ability to rebuild your systems and data from scratch to a known good point. This addresses the CPS 230 point about maintaining critical operations throughout severe disruption. This emphasis on disaster recovery is critical because APRA is concerned about rare but catastrophic events, total loss scenarios which might necessitate you rebuilding systems from scratch. As APRA has often said, resilience is nice, but recovery is a must. And this need for recovery capability was underlined in a recent APRA letter on security and adequacy of backups. The highlights here were that regulated entities must back up all systems necessary to support critical operations. They must isolate and protect their backups so that any compromise of production cannot also compromise the backups that you might rely on for recovery. And thirdly, APRA requires or emphasizes that you must regularly validate that technical recovery capability. In my view, cloud helps you do these things much more easily. I'll conclude this section by just highlighting some of the many advantages I believe that cloud has over on-prem models and how these advantages can better help you meet CPS 230 requirements. Firstly, cloud provides a highly resilient, highly available, highly secure infrastructure platform for you to build and deploy your applications on top of. Speed is another key advantage. In cloud, you can provision new infrastructure in seconds rather than days or weeks or even months that it might take you to order physical infrastructure. This speed advantage helps you not only improve your deployment times, but in the event of issues, it helps you reduce your recovery times. Speed helps you improve your testing. Speed helps you test more and test more often. All of these advantages are key to meeting CPS 230 requirements. And cloud providers typically offer integrated resilience services. AWS has a product called Resilience Hub. This measures the resilience posture of the applications that you have deployed on our platform, helps measure your recoverability against the targets that you set, and makes automated improvement suggestions that you can implement literally at the click of a button. We also have a service called Fault Injection Simulator. This allows you to break things at random in the right environment, development and test rather than production. And it lets you see how your architectures respond under a variety of failure modes, again helping you identify weaknesses and make improvements. These tools are not just valuable in themselves in terms of making technical improvements, but the outputs of these tools are also highly important for meeting CPS 230 requirements because they provide evidence of your resilience posture and your efforts at continuous improvement. The outputs of these tools are really valuable for discussions with board, executives, your auditors, and of course with APRA themselves in demonstrating your resilience and recovery capabilities. So with the slightly more theoretical part behind us, I'm now going to look at some worked examples of how you might use the cloud platforms available to you to build your applications in a way which not only reduces the likelihood and impact of disruption, but also improves your recovery capabilities. So here's our generic cloud construct again. I like simple analogies, and I think of our regions and availability zones as building blocks. How are we going to use these building blocks to model for various CPS 230 resilience scenarios? We'll start with a very simple deployment. And now, because an availability zone, at least in AWS, has more than one data center, this very simple deployment within one AZ can already withstand a lot of infrastructure failure that might cause serious impact in a 2 data center on-prem model. However, we haven't really considered resilience or recovery with this deployment. If we're hit with ransomware or data corruption, our application is lost or unrecoverable because we've got no backup. In the highly unlikely event of an availability zone outage, your application would remain unavailable until the availability zone is back online. Now, this kind of deployment might actually be perfectly fine for non-critical applications like development or test, but we need to think about what CPS 230 is asking us to do in respect of our critical operations. For any system supporting critical operations, we need to use our building blocks better. So now we've got our application running in a high availability configuration across 2 availability zones in our region. This is far more resilient, but we've still got no recovery capability. Again, let's look at the unlikely scenario of an availability zone loss. In this case, we would continue operating uninterrupted in availability zone B. This is much better. But ransomware locks up our systems. We lose our application and data in both AZs with no ability to recover. We can definitely do better than this. So let's really leverage all that these cloud infrastructure building blocks offer to us. Now we've got our application deployed in a high availability config across 2 availability zones, and we are taking backups of all of our critical systems to our 3rd AZ, and we are properly protecting and isolating these backups as APRA wants. We use an entirely separate set of access controls to make sure that no single person or account has access to modify production and backup environments, and we use write once protection on our media to prevent deletion. We are regularly validating these controls, and we are regularly rehearsing our ability to recover as CPS 230 requires. So if we lose AZ-A, things continue in AZ-B, and we are still backing up to AZ-C. We get a ransomware attack. It locks up our applications and data in AZ-A and AZ-B, but all is not lost because our backups in availability zone C are protected, and we use those to recover and continue our operations within tolerances. Now, to that idea of building blocks, multiple regions give us even more options for resilience and recovery. Now, where cloud providers offer only one region per country, multi-region solutions which incorporate the use of a region in another country need careful consideration around things like data residency and other jurisdictional risks. However, AWS has 2 regions in Australia, one in Sydney, one in Melbourne. This offers us a huge amount of in-country options. On screen is just one example of a highly resilient config, which is running across all 3 availability zones in Region 1, say Sydney, whilst we're using Region 2, Melbourne, to take our backups. And we're completely isolating the Melbourne region from Sydney. We can model here for an event which is as extreme as the loss of an entire region, and we can recover to our second region with ease. This is what APRA is looking for in CPS 230, for you to identify plausible disruption scenarios, even extreme ones, and validate your operational resilience and recovery posture. On-prem infrastructure simply doesn't offer the range of building blocks that cloud can. This is why banks are reducing their CPS 230 related resilience risks by migrating critical platforms to the cloud. So look, this is a big topic. Jamie, Krish, Tatiana, and I have really given you the blitz chess version. And we've been deliberately cloud agnostic wherever we can. But as Jamie said, it's critical to understand that not all clouds are created equal. We would love the opportunity to dive deeper with you into how AWS can help accelerate your resilience and CPS 230 compliance journey. We'd like to connect you with our experts, including ex-APRA staff like Krish and myself, and other risk and compliance experts that we have working in financial services. It is our role to help you navigate that regulatory landscape, particularly APRA CPS 230 and 234. We are experienced and would look forward to having all types of discussion with you, things at the board and executive level, working with your operational teams, and even conducting detailed technical reviews to assess and improve your resilience posture. We've come in bang on time, which gives us 10 minutes for Q&A. I'll wrap up by saying thank you very much for extending us the opportunity to present to you today. And I will hand back to Nick, who is going to curate a few questions and answers. Contact details for Jamie, Krish, Tatiana, and myself are on screen, and we would really appreciate it if you could fill in the ABA's post-webinar survey. Your feedback is really important to us.
Great. Thank you, Julian, and thank you to the rest of the AWS team for your contributions. Something I should have done at the beginning, just in terms of the Q&A, if you look at your screens, the Q&A interface up top there in the menu bar, please type in your questions that way rather than raise your hand or ask questions verbally. Just gives us a little bit more ability to help manage this. While you're thinking about any questions, I might kick off with one or two of my own just to see if anyone else wants to come through. Jamie, just sort of starting with you, you're sort of talking about the role of a cloud provider in supporting compliance. Can you sort of share a little bit more? And I think AWS, along with APRA, certainly would be amongst the first to say that responsibility for compliance always remains with the entity that has to meet its compliance obligations, not its vendor. Could you talk a little bit more about the conversation that you have with a client, or that you should have with a client, about building that confidence and that reassurance about what the compliance expectations are and how the vendor can sort of help provide confidence, but not accept responsibility as it outsource the whole thing to the vendor?
Yeah, absolutely. I mean, start with there are elements of it that we do have responsibility for. So I go back to the shared responsibility model. Absolutely, the regulated entity, has the obligations and is responsible to report back to regulators on their management of their environment and how they're setting out to be compliant. But in working with cloud service provider, there are certain obligations that that we need to partner to deliver upon. Elements within that shared responsibility model with regard to the actual physical protection of the infrastructure, the data centers that are provided, and the operations of those data centers and the infrastructure sitting within them, and the certification sheet that I shared as part of that. So when regulated entities report back to the regulator, that can be included within their reporting, as can elements of the automation of the reporting as well, which needs to come from us to the regulated entity in order for them to be able to provide the necessary documentation back to the regulators. So, it is important that that you're working very closely with your cloud service provider to both understand and then prepare for and establish those governance and controls and that operating model that leverages all of the benefits of working with the CSP to meet your obligations. So, there are sorts of organisations sort of move to the cloud and then don't leverage the full benefit of what's been made available to them by moving to the cloud. So I encourage you not to sort of fall into that trap. Recognise and realise that, moving to the cloud, there are significant benefits in how you are, meeting your obligations that can be supported by that CSP. And so work closely with them to understand what they are, and then feed them into your controls and your processes to simplify your obligations and how you manage them.
Thanks, Julian. That makes a lot of sense. Krish, is one of the benefits of a cloud provider simply that it sweeps up a lot of vendors that you might otherwise have to have individual relationships with? Or how does using a cloud provider sort of help in narrowing down, I guess, the breadth of that CPS 230 obligation, which could go a very, very long way into your business relationships with a whole second, third, fourth tier providers?
Yeah, great question. Thanks. Certainly, it does simplify some of that scope, right? Instead of having individual arrangements with network, with physical data center providers, with software providers, it is convenient and useful to have that one agreement with AWS. And as per Jamie's comments around shared responsibilities, we have obligations to provide you assurance over the aspects of the technology that we deliver on your behalf, for sure. We also have an AWS marketplace where you're able to consume additional services that are outside of the AWS ecosystem provided by our partners, whether that's independent software vendors for core systems such as SAP banking and others, or whether it's for consulting or advisory services through our AWS partner network. Certainly, you do point out an advantage in that having the relationship with AWS as your primary partner does give you access to a whole lot of simplicity and a whole lot of value with our entire network. In terms of managing the scope of CPS 230, I'll go back to focusing on critical operations and being very ruthless with prioritizing your effort on those, because let's face it, resources are constrained, not just investment, but people and their time. So being able to demonstrate to your risk committees and to your board that you've focused and protected your most critical operations to begin with will certainly go a long way to showing that you're prepared for what is out there in terms of disruption scenarios, enable the ability to continue your operations.
Great. Thanks, Krish. Again, very, very, very logical. Tatiana, just quickly, we've only got a moment or two left, but I thought your observations about the evolution of the regulatory landscape on AI were spot on, although it's interesting that Ed Husick is still consulting on exactly what these guidelines might look like. So that conversation's not quite finished yet, I think. But I guess from your experience, what are you seeing is the use cases that are getting most traction, and bringing that high risk lens? It sort of feels like just about everything in banking could fall into that high risk agenda, and that sort of, there's a bit of a clash there, right?
Yeah, so I might start off with just a general position that from the past 12 months especially, because of that regulatory environment, we see across the financial services sector that organisations are typically much better placed and have therefore been moving a lot more quickly. The use cases that I've been observing in particular have been around productivity uplift That has definitely been one of the largest use cases that we've seen across the financial services sector. And probably the second category has been use cases where there's a meaningful return on investment. So whether that be from solving challenges or creating new experiences, we're starting to see more and more of those. But certainly toward the beginning of the year, a large amount of use cases being deployed were around productivity applications. And I think the last part of your question was around risk and that not being a completed conversation. AI is evolving so rapidly that it's hard to say that that will ever fully be a completed conversation, but it's actually being able to establish the right evaluation frameworks and testing frameworks as the technology continues to develop. That is going to be extremely important.
It's interesting on that ongoing conversation front. I haven't had a chance to get across it yet, but I did notice that Treasury's just put out a consultation on the interaction between AI and the Australian consumer law, which is a different lens from the productivity lens or from sort of the compliance lens that has been brought to this conversation until recently. So we'll see what comes out of that. Julian, a final question for me, and we may have to wrap up after that. I'm sorry, we're running out of time. Hurricanes Milton and Helene in the US, big widespread impact. Helene sort of took out everything from Florida to North Carolina. How does that, maybe there's some anecdotes that you've got from your network about how that's impacted the ability to deliver cloud services, or are there observations or lessons, I guess, in working with clients to map out their risk profile and how to best to configure, their strategy around, different locations, regions, and availability, etc.?
Yes. Look, to the point about those two recent dreadful weather events, there's an awful lot of work that goes in behind the scenes before AWS even puts infrastructure on the ground. So we would map for things like likelihood of natural disasters occurring. So in the cases of the events that hit Florida and the sort of central US, our data centers weren't placed in, things like seismic zones or hurricane corridors, etc. In terms of sort of general architectures to follow, in the Australian context, we find that the vast majority of our organisations can meet and exceed APRA's requirements just using a single region. But to guard against those catastrophic type events, such as the loss of a region, we are seeing backups being taken down to the Melbourne region, or customers building their applications in Melbourne and taking backups to a data bunker up in Sydney.
And in the Australian context, that regional thing is more, or the event is more around, a cyber event or something like that, rather than a physical, earthquake or whatever. Is that right?
Look, that's maybe something that requires more time than we've got to answer, but AWS, just as APRA expects its customers to model for all types of scenarios, we do exactly the same ourselves to ensure that we provide that continuity of service.
Yeah, great. All right. We have run out of our time, so I'm going to draw a close to the session today. Just encouraging any members who are keen to hear more about this, the contact details of the AWS people are back on your screen. Feel free to reach out to them with any questions that you didn't want to ask in a public forum today. And I will close with my thanks to Jamie, Krish, Tatiana, and Julian for your time and again for your talent. Thank you for the contribution to the conversation, and I'm sure that all of these themes will continue next year and then probably well beyond that as well. So thanks again, everybody. Enjoy the rest of your days.
Pleasure. Thanks for having us, Nick. Thanks all.